Alright, so now I'm gonna go to S&P 500. That's what I was waiting for. This is what I was waiting for. Seeing how that was gonna react during this time. Alright, show you guys. 3 monthly wise, we just created a new all-time high. That is very important. It is very important that we just created a new all-time high in a 3 monthly, not just a 3 monthly, a 6 monthly. Why? Because for the last 9 months we couldn't pass this price right here with the S&P 500. Let me take my indicator out. So 3, 6, 9, 9 months, almost a year to pass this price. Yeah, we did it originally, but that doesn't count. What counts is when we close above it. This is just tickling you, telling you, hey, we touched this area twice. Normally the market gets scared, especially when it drops certain prices. But when you have candles like this next together, especially giving you the first one the resistance, the next one your support, you box it up. I talked about this strategy before, where it's like when you get inside this box, when you mark this box up right here, normally it's much cleaner, smoother, an actual box than this right here. So the way it works is normally the last candle, you box it up, and the last candle, depending what time frame you're on, you pay attention to the last, if for this one would have been the last month, and then the last 2 weeks or week of that last month of this 3 monthly. Why? Because what it'll do is it'll be doing this all day, all around, and finally on the last week, let's say it was down here, but then here came Monday and Tuesday, and then finally Wednesday shoots on up, and then here comes Thursday and Friday, and it goes crazy. So it once it gets inside that box and you see that it's coming towards that expiring date time, just you know it's, and then especially when there's data coming out supporting it, you know it's gonna be a blasting off. Whether it be up or down, but that's especially if it closes inside, that lets you know that the next candle is also gonna try and break and complete that pattern. If it then gets rejected and goes back below, it stays there, especially towards the end of a forward candle. That tells you it didn't go through and it's gonna fail. It's gonna actually start going on down. So, anyways, where we at? We got that. We close here, so it's important to hold or to know if we do go down. This is gonna be your first area where it's gonna get stopped, and then this is gonna be your next area right here. But I don't see it doing that, to be honest. Then we go to the weekly. Again, if we do go down, these are gonna be areas right here, and then your worst areas, like I said, coming down here. But I don't see that happening. Let's go to today. So look where we are. Look how we're holding this area right here. Look the trend. There's a trend right here happening. So let me go to a forward candle. And what I normally do is on the Fibonacci, I have an automatic. That way it pops up in every candle automatically. Not just that, I'll then go here and I'll put it where it's at, maybe a couple hours ahead of the market, and draw 50 on it. And then I'll correlate a color to the time frame to know which candle that correlates to whatnot. For example, blue is 8 hour, green is for 2 hour. So we have a strong price resistance right here as it goes up. And I know there's an 8 hour Fibonacci right here. So if I go to the 8 hour Fibonacci, it's right there. That way I don't gotta go and sorry for all those lines. So anyways, so what it's doing is since we have data tomorrow, let me take the crap off. Since we have data tomorrow, well, I mean not data, but yeah, the FOM and tariffs. What is gonna happen? You gotta pay attention to ignore these lines, people. By the way, here's with the 3 monthly close. Here's where we close the week after that, and this is currently the week where we are right now. So 11:45 to no 11:30 to 12:15. It's important area. That's when the market really goes for the actual move, especially when you're coming closer to your forward candle coming to an end, especially not just that, but your 12-hour coming to an end. It's very important to go for the actual move. So what needs to happen is in this 1 hour time frame, it needs to go on up here and be somewhere here at 12. That way 1 and 2 can be in this area, and then 3 and 4 and actually finally break through this 4 candle trend line if you see it happening going on down. So that's what needs to happen. If we start getting rejected here and it's already 12:15 and coming to actually 1 o'clock, then we're gonna start dropping, especially because of the fears of not knowing how the tariffs are gonna come out and the results and all that. So we're pretty much gonna come down, test this region. We're gonna most likely create support in this region right here also. Let me clear this out. But yeah, we're gonna create support here. Let me put my indicator. Yeah. So see, we're gonna hold this, break through this, so we create support. That's what it is. It's a support cushion. Look at that support cushion. So we can go on up. Otherwise, we're gonna start breaking it. It's gonna turn red, and we're gonna start testing these prices here. See the next cushion. Yeah, see it's down here. So it's gonna come down, test this cushion, and then 3 or 4 o'clock, 5 again, going up. Um, and again, if we this early in the morning at 6, we're still here because we have a 2 hour candle 50 Fibonacci right here. Yeah, so if we break on down, we're gonna still have to break through this, and if we start getting bad news in the morning, we're mostly gonna go on down and test these regions again down in the morning. But then if we get some sort of tweet or comment or something to help us, we're gonna sustain that and go on up, especially towards 10 or 9, no 10, because we close at 10 a.m. we close at 4 candle. So normally by 7:30 to 8:15, the market also goes for the move in actual move. So if we're down here somewhere, the market then gonna start picking it up because the Fed is gonna release their statement. So we're excited. You know, what is he gonna say? Is he gonna say this? Is he gonna say that? So then the market will start picking up from here on expectation of that. And again, it'll try again this time. And if it's good, it'll break. And we most likely will close the day here or break through this. But I think we're gonna close the day here, or if anything, just here. All still positive because we heard good news from the Fed, FOM, or whatnot. And then Thursday we'll have data, and that data is either gonna make us create a slight all-time high, or just correct us and bring us back into this area. And then depending on what happens during the weekend, whether it be something about tariffs or whatnot, we're either gonna open lower or higher, and we're gonna be able to cash that through Ethereum and Bitcoin over the weekend. But that's it so far. That's all I got for the S&P. On the move on to the crypto right now in the next video. Wait, never mind, people. Sorry about that. So, something I want to point out. There is an indicator I want to mention. So this indicator here on the 4 candle, I believe. So the way it works is The red, I mentioned this already, but I'm gonna go through it. The red is your volume, the strength of it. Blue is up, the uptrend, and orange means downtrend. This white line, I put it because it's an indicator to let me know what's happening. Right here, the market was going up because it started going above the white line and the volume started getting higher. When this happens, it's telling me the market is getting ready for a big move. You have both up and down and volume. It's like a rubber band. They start stretching and stretching and stretching. They go underneath and then they snap, and then one of them goes flying. Kind of like what you see right here. You see how they're both tying up, going below. Finally, they go below and then one of them snaps. You can see it over here too. How they start getting tight. Finally, they snap and they go flying. That's what's happening right now. You're seeing volume go low. You're seeing all of it go down, but it's like momentum is like gathering. It's compressing. It's and I think what's it four, just a four, and even here on the 8, you can see that it's slowly getting tight. And then for the other one, my bad for the lines, you guys. Again, the weekly. Again, sorry for the lines. It's my thing. No, the daily. The daily. So notice right here in the daily. Notice this about the S&P for the Mac. This whole time, before 2020, look how high the market was. For all those years, look how high the market would drop. Here's 2008 probably. Yeah, 2008. But look how high it would go. And look how crazy it started getting after COVID. Here came COVID, the second COVID, the second hit. Look at that little pattern right here that it gives you. But look how high it starts getting after that and sustaining that high. And then now look how it smashed through that strong resistance that it had, and then tested it, and it's now creating support. And then now if you see the S&P where it's at, by the time this, and it's pinching, what you want is you want this to go above, so it can definitely show you that a rally is coming. When it starts going down underneath the orange one, it's telling you the market's going down. So right now it's pinching. It's pinching because it's neutral. It's not that it's neutral, but it's at a really, if you notice that breaking point that we just had, we're really close to it too. So we really haven't been really moving out of this price range. So if once this baby goes up to here, we're gonna be a new all-time high, and by then, if we still can maintain that, especially on a daily, it's telling me that the S&P is gonna fucking fly like crazy later on. But if we keep having struggles here and we start seeing even rejecting here and start holding, dropping down, then it's something to pay attention to. Now, if this drops down here, that'll be something to pay attention to. But that's it for it, you guys.